today talk about reporting cash flows. Okay, spend a lot of time talking about statement of cash flows. Okay. Again, why do we have a statement of cash flows? It's the last financial statement, except it's one of the most vital ones. Again, it answers some very important questions. How does the company receive its cash? Where does it come from? Well, why is our cash balance going up or down? What's causing changes? And again, explain the changes. Why do income, our net income, why is it different from our cash flows? Where the company spends its cash? What's the main cash inflow? What's the main outflows? We also look at cash equivalents. These are highly liquid investments. It's not cash, but many times say just as cash. Treasury bond, a certificate deposit. Okay, close to maturity. The market value is unaffected by any interest rate changes. Now again, all of our cash activities, we got classified into three categories: operating, investing, and financing activities. Okay, these are our three main activity sections. We have our operating activities, investing activities, and financing activities. Remember, for each one, we have our cash inflows and our cash outflows. Again, operating activities. These are the company's day-to-day operations. What they do every day to earn net income. Again, the main inflows, obviously, cash from customers, any dividend revenue, trading securities, from credit sales. The main outflows, what do they got to pay every day just to keep the doors open? Keep the business running, pay our employees, interest, taxes, buying our goods, operating expenses. Investing activity says, did the company make an investment? They buy and sell any property or plant equipment. Inflow, if you sold any old property equipment, any intangibles. Did you collect on the principal notes receivable? The outflow, the opposite. Did you buy any property, plant equipment? Buy any intangible assets? Did you loan any money out for notes receivable? And financing, how are you financed? Is it debt, equity? It made inflow, are you selling stock? Issuing treasury stock? No one giving you money. And when you first get a note, it's going to be an inflow. You just got a loan, well, of course it's inflow. And then we start paying it back, then that's when it becomes an outflow. You pay any dividends, pay to your shareholders. Any withdrawals by the owner. And then we talk about, here we're going to disclose at the bottom the notes of the financial statement. If you have any non-cash investing financing activities, you retire any debt with stock, exchange of non-cash assets for other non-cash assets. Okay, let's talk about how we're going to prepare a statement of cash flows. Okay, again, these are our three sections: operating, investing, and financing. So we start with operating and investing, financing. Then we see overall, did your cash go up or down? And at the beginning of the year, and then it'll equal your cash at the current period end. That should match the cash on the balance sheet. If it doesn't, it's either fraud or an error. So again, how do you prepare it? Look at the increase in cash. Compare the balance sheet from period to period. We just talked about your cash, operating, investing, financing, and of course at the end, we verify it. So we see cash here. On the left-hand side, obviously the debit side, we have our inflows. On the right-hand side, we have our outflows. What do we pay? For what? Yeah, we're going to view a lot of our non-cash assets, liabilities and equity. Again, this is what we need to prepare the statement of cash flows. Create balance sheets, current income statement, some additional information. Again here, just thought about our operating, investing, and financing activities. And again, current assets, current liabilities, that's going to relate to our operating activities. So it's investing. Again, long-term liabilities and equity is going to fall under financing. Okay, so we see how each one goes under. Again, remember, each one you have to classify. What goes under operating, what goes under investing, and of course, the last one, financing. Now, just the operating activity section, we got different ways to do it. We do the direct method or the indirect method. The direct method says exactly list how much cash we receive from customers, minus what we paid out, or cash inflows, minus our outflows, done. Indirect says, nope, we're going to start with the net income, and we adjust it to reconcile. So we start, because remember, this is done accrual base. Again, you want to make it to a cash basis. Okay, now most companies use indirect method. That's why we're going to focus a lot on the indirect method. Okay, so again, we're comparative balance sheet here. We see the increase and decreases in our income statement. You get some of the information we have. Now remember, we look at our current assets, current liabilities. 2, now net income. Start with the net income. Add your non-cash expenses such as depreciation, amortization. Look at our change in our current assets, current liabilities. If you had a loss on the income statement, you add it. subtract a gain. That'll give you your cash flows from operating activities. Now remember, if you had an increase in the current asset, you subtract from net income. A decrease in the current asset, you add. Current liability do the opposite. You had an increase in current liability, you add to net income. A decrease, you subtract. Okay, so we see, start here, net income. Add our depreciation expense. Add our loss, and of course subtract our gain. And we start with everything here. Look at our current assets, current liabilities. We had increases or decreases, just like we went over. Okay, so we see here, start with net income, take everything out here. So we see, because it brought cash in, cash went up, it was an increase, we had net cash provided by operating activities. Need some summary. And here's your adjustments that we talked about. Okay, again here. Always start with your net income and net loss. It's our non-cash expenses. Then you do your current assets and current liabilities. Okay, you want to follow that format. Okay, now let's look at investing and financing. Because again, look at your changes in the investment-related accounts. Explain the changes. So we see right here, now so fields, we had an increase in planned assets and accumulated depreciation. Okay, again, we only want the cash here. How much cash did you receive when you sold that asset? Okay, again, all we want is right here, that cash, $90. That'll be a cash inflow. The rest is fine. We're not going to say ignore the rest, but in the meantime, for this section, all we need is the cash from the sale of it. The other part of the loss goes on operating activities. Here, now we bought some cash. So then we have a decrease under investing activities. Okay. We sold some long-term investments here. Cash received from long-term investments. It's cash. Okay. The loss we're going to add to the operating activity section. Okay. Same with the land. Again here. Cash goes to investing activities. The loss goes on the operating activities. And finally, like I said, that's going to affect your long-term liabilities, your debt, and of course, next part, your equity. Then again here, notes payable went up here, so you got a loan. So, okay, or in this case, you paid off a loan, retired for $18,000. Cash went down. Issue some stock here, pay some cash dividends. Okay, so it says here, cash some stuff, 15,000 minus 18. Now here, you lost cash here, cash went down. So it went down 17,000, net cash used. We see overall though, if you add your operating, invested, subtract your financing, your cash still went up $5,000. And you want to add cash at the beginning of the year, 12,000. So we see your cash should be 17,000. Again here, do each one here. From common stock here, financing. Here you paid out your notes payable. Cash went down. Paid dividend. That also went down. Treasury stock. It also went down. Here, you lost $50 here. Again, 17 accounts. Foreign. And cash flow and ratios. You want to look at the way to look at it. Now, let's see the different uses here. Yeah, and income-based produced assets, operating cash flow, divided by your average total assets. How much cash flow you gain on your total assets. All right. All right, class. That's all I got for this week. Okay, let me know if any other questions. All right. Thank you.